Hello, welcome to another East Futures Trading. Today is Wednesday, July. It is July 26th, Wednesday, 9:41 p.m. I hope you have attended Jim's webinar. There's a lot of information there, and what you want to do, what we want to do is, we want to have our own opinion or own analysis of the market and what is going on. Um, Having that, we may be wrong, we may be right, but it will be based in our own way of thinking, our own analysis. It was very good. That webinar was very good. I said it is through this. It is advertising. So he's advertising his next primer, and but it was well worth. But as I say before, I use Jim as a benchmark, and for example, what I do is I do my homework every day, right? And one of the things that just by doing your homework, you are ahead. You know, showing to the market, just by being present in the market at all times, you are ahead of 80% of people. And by doing your homework, you are ahead of way more than that. Notice this. This is I couldn't avoid by noticing how this. This is just what I do. This is my okay. This is my thing, and it happens also. We all see the same market. We all see the same information, but we may use the information differently. And this is what is just, man. This is something that shows you who is doing what. Okay, this is just. Can you see or can you imagine the amount of stops that are below here, 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 here? This the question. Just because those stops are there doesn't mean I'm going to go short or I'm going to be short. Right now, the market is being bought again from this trend line. And let's check. Okay, I'm going to pull this one here. It keeps being bought from that level. Okay, see this trend line. It adds another day, another set of stops down here. Okay, it is just what's happening. Now, from yesterday, something very important we have from yesterday was this: the market has two distributions, one on the upper side, one on the lower side. And the separation, the base of the close of the distribution was exactly the breakout of the previous day. The market opening inside this, if there is something serious to the upside, the distributions will have remain open. Okay, the market will have keep these two distributions. We can see now that the market is open that that's not the case. These distributions have been closed. That's something negative for the market. I am not saying the market is going to break. What I am saying that this is negative. That whatever happens to the upside, notice that there is no excess in the upper side as well. Whatever happens to the upside, it remains questionable. Now we have FOMC today at 2 p.m. and most important, we have Chairman Powell press conference at 2:30. That is what that event, whatever he says, can bring volatility to this market. You know? Anything can happen now. The market can trade in range, can have a very tight range. But something, for example, in the trade, once the market closes this distribution, the trade is the opposite side. So opening down here, the trade is almost over here. But notice how where all this movement where it started. It started exactly from half back. This level here is half back, and now we have 1, 2, 3, 4 periods here with a lot of stops here and then just below that. Okay, again, I'm not saying that that is going to happen, that's something is bound to happen to the downside. I'm not saying that. Just notice this is pieces of information on what the market is doing now at this moment in time. From yesterday as well, we have multiple times the market recorded high volume, high blocks going to the upside. Here, and the one that happened here on the 19th was also to the upside. Yeah. The 19th, what is the 19th? Is this day. Still was to the upside here. Okay. If somebody who is going to buy here, who buys here? Do you think short-term traders buy here? Somebody who is going to, able to buy 1,000 contracts, can you consider, the odds of that participant holding his her position, in this case to the upside? What are the odds, right, that this is going to hold for a longer period of time? For example. Now the market again has opened inside previous day range. Market again inside previous day range. This time to the downside, and in particular, what I'm watching now, what I'm observing, is this distribution here in the lower side. It was very important. It was very important for the trade today. Remaining market not closing the distributions, okay, it remains a positive sign. When market closing the distribution, it's changed the tone of the market. I'm not saying, I'm not saying the market is going to break right now, but there's something there that is changing, and the direction of the change is the higher price. In the same way how this downside spike here was, there was a spike here to the downside, was rejected when the market traded higher and built value above the base of the spike. That's happening, something like that is happening here when the market rejects these higher prices. It's not saying it's going to reject it forever, okay? Because the market is in constant change. The market don't go in one direction forever, in one direction or the other, or another forever. Everything's about change. Now, okay, do you remember when we were talking about the conditions the market, when the market opened here, when the market opened inside previous day range, inside previous day? Now the same thing is happening again, and furthermore, zooming in is inside this distribution. Why these distributions are important? I mean, from my way to trade, from the way how I see the markets, is because I consider this one day and this one another day, and coming back inside this distribution, the market comes rally and comes back inside this one, the market can targets the opposite side, which is this side. What is the condition of the overnight inventory? Overnight inventory was mostly short, but look at this as well. Look at how well this selling is coming from the 4,600 here, right? Now the 4,600 is something to pay attention to as well. It's been traded back and forth, multiple times. It is different than the 45. The 45 is being used as a support. It was resistant before. The market traded multiple times towards that reference, the 4,500, and was sold multiple times from that. Now the 46 being traded through. Okay, the relevance of this 46 is different than the 4,500. The market has just get quiet. I had an order here that I am going to cancel now because I don't see this is how this can work now. But what I was looking is, the market is to the upside. The trend still remains to the upside. Market took this make a high here, and was sold from value area low here. Now this is like it was another day. With lower distribution, I'm treating the lower distribution as it were another day. Just another day. Notice what is being sold from, again, from previous day high. It was this, okay, here. Now it's the higher this distribution here. Let me see how can I open this. I guess I can. Okay, that's why I open this. Okay, I have one distribution here, which I treat as a day, and I have another distribution here. 2 days. I can separate this here. Once the market trade inside this distribution, notice how this is separated by single prints. There's 2 single prints here. The target is the opposite side of the range. Now, who would want to be long in this market, knowing that the FOMC is scheduled at 2:30 or 2 p.m. And what about? Oh, look at this! I thought the Braves are public now. Huh. Okay. I like this. BATRK. BATRK. I'm going to add that to my watching list. Just a second. BATRK. Okay, what's happening here in this BATRK? Wow, they went all the way up to 50. Okay, but never mind. I'm getting distracted here. Okay, during the day, during this kind of days, the day usually is quiet. We have a quiet day. I thought the volume was going to be lower, actually. It looked like it was, but it's kind of picking up. The back is picking up some volume here. For the 5 minutes, I guess it can be as similar as yesterday. Let's see. Now this high is questionable here. This is not a good, not a particular, good high there. Did you see how the market started to buy here? Once it opened, just buy, the buying just keep coming and coming and coming. And now it's dry, it's getting quiet. Now there was a lot of positions being filled. And this is the thing, I try to get inside the mind of the competitors, inside of competence. Traders probably saw the market going lower. Oh my God, this is something gosh, it was so obvious that, what the heck is going on here? Oh, I have separated. Okay, I thought it was a gap. I forgot that I split the market profile. Okay, okay, this is a gap. No, the low is down here. I thought that was a gap. We are still inside yesterday's range, the whole range. Right? And when traders see what's happening, yeah, the market is going low, low, no, okay, the market is going to keep going low. They're going to sell, sell, sell. You know, value help us, help us to identify the trade. Value is higher relative to the previous day. Yesterday's value was higher. Today, the market is opening with lower value. It is an inside day so far, and the value is lower. Notice how many times so far this opening or this low has been bought. Have you seen? Do you remember how many times the market has been bought? At least 2 times I saw the market coming to that level and being bought from there. Yeah, 2 times. Exactly from the low here. No, exactly from the opening. My bad, not from the opening. Oh, and my position. Oh, look at this, man! Look at this. Look at this. Who cares what happened before? Look at this. Look at this tremendous accumulation of volume here now. There's a lot of volume here. I got to cancel this. It's just getting too distracting here. Okay, this is a lot of volume here. Whatever happens from here, this could be okay. It seems like FOMC is going to bring today. It's going to be very volatile. The after FOMC, we may have this sharp rallies followed by these big breaks. Oh, that's a lot of volume there. Notice how now there's no big blocks here. Look at this, nothing, not even 50s here. There's a lot of activity here. Buying, selling, there's a lot here. No? There's still traders going short, traders going long, a lot of traders going short, a lot of traders going long, but somebody has to be wrong. Both cannot be right. Some has to be wrong here. And this is a nuance here now. Okay, but I'm going to do this when this okay, this is 720. When is 720? That's last week. I'm going to call this level, okay. We have something similar yesterday, up here, no? When the market did its final push to the upside, you got something here. Okay, what I'm going to do, I'm going to change charts. I'm going to use this one. Just to monitor closer. The inside bar. What is the direction of the trade today? Value help us in that. So far, value is overlapping to lower. Multiple questionable lows here. Everybody knows that the odds of having an increase of 25 points this afternoon are high. Okay. This is what I have in my. I have two screens that just look like this. You know? Come on. They just look like this. This is the one at the bottom, and this is the one at the top. Okay, I can see something. I mean, it depends which I just focus on one. I don't focus on both at the same time. And this, the same broker I have that allows me to trade. They have their own chart trading platform, which is Photon Trader, which also has the ability, has this plugin that I can use in order to have market profiles charts from Window Trader, which is another company that allow me that. I can do that with for FutureSpat, and also they give me Rhythmic Trader, so I can use this. This is easy to go short, long, short. The bottoms are quite big here. Easier than this one. When I want to use some strategies is when I use this. What I can set up here to the upside, where I put a number. Oh shit! God damn it! Oh, okay. I thought I closed it. Wasn't good. That wasn't going to be good. What is going on? Should I? Oh, this is not. When I see these things, the market is still paying attention to these things, but kind of too close to the high here. Volume is the same as yesterday. Inside bar, but it's just 4 minutes into the opening. Right? Remember the volume here. The volume that we have an A. We had an A. This volume here. These are shorts, longs, but they are huge here. Nothing here yet. I had in the morning. I mean, this is a counter trade, but this is very against. When you do a trade against the trend, it has to work fast. Has to work fast, because if you let it go in the direction of trade, you can be well underwater, you know, by the time you realize that your trade's not working. So before entering a trade against the trend, it has to work really fast. Now value is lower. There was an attempt to do counteraction to overnight inventory that what I'm doing, I'm watching this. There was an attempt to do a counteraction to overnight inventory. But this particular high is this very questionable as well. Okay. I guess I am expecting something here. And when that happens is when I start having biases. And biases are very dangerous here. I don't think anybody who has power, buying or selling power, will do anything at this moment in time. They are already positioned. If any, this is just very short time frame trading here. Okay. Remember, opening inside previous range increases the auto rotation. The higher or the closer the market opens to previous day range, to halvback, to previous day halvback, the higher is auto chop. The difference of today, this that on the first side, the first time when you see that, that could have been the case, but you have to notice, you need to notice that there was two distributions yesterday. Okay, and the market opening or closing the distribution actually doesn't favor. That's a negative sign for the market. Okay. I have that piece of information. Now, this opening has been bought twice. Traders are just buying at the low, buying at the low, buying at the low, keeping. This big low, just add another low here. 1, 2, 3, 4, 5 lows in this area. Okay. Something I would like, for example, I start having some crazy ideas. So something I would like is the market opening, the market having a big rally here, repair this high, comes all the way up to here, or maybe, who knows, all the way up to here. That would be really nice in front of FOMC, having FOMC in front of that and all of these longs, what will happen. But that's just a dream, bro. That's wishful thinking. Trade what you have in front of you. Most of the job here is watching, observing the market. You will see traders. Oh, there's nothing happening in the ES. I will go to Nasdaq. Guys, this is nothing happening here, and go to Apple. Oh, they go to another markets. You trade futures. They just keep jumping from one market to another. Pick your market, because there's a lot of things. A lot of nuances, a lot of information that the market is delivering all the time. And when we are jumping from one market to another, we just miss that. We just miss those pieces of information. A piece of information that can be relevant when something happened here, for example. Right? What happened yesterday? There was this trade here. Nothing is happening here. This is boring. But then there's a breakout here. There's a breakout that happens here, which I was not part of, because I consider risk being long was high. But this is a breakout, And you have 3-day range here. Notice that we have 3-day range here, another 3-day range here. The morning we were talking about, what will happen if there is a breakout? What will happen if there's not a breakout? If the breakout doesn't happen, what happens if there's a breakout and fails? All those things we talk. We were talking, and value yesterday was higher. Was overlapping to higher relative to the previous day and the previous periods, and now value is lower. Okay, value is lower. So value helps me, to see the market, what the market is doing, what value is being accumulated at the odds, the trade in the direction of value, in the direction where value is moving. The odds of success of having a successful trade there are higher. That's what professional traders do. You want to be a professional. What is the bigger time frame trend, for example? The trend is to the upside. The daily, which is the shortest of all of them, the daily is to the upside. We have 3 days that are going back to back, going to the upside, with value overlapping to lower to high. Overlapping to higher. There's some acceleration there. Now, value is low, but it is only 2 periods. You know, what I was looking today is the market taking this low here. Okay, because multiple times the market has traded towards the downside and just failed to take the overnight low. Well, the traders are doing that again. You know, and notice where all the buying came from. It came from POC, and we have this weak. I have these marks here that are weak levels. No, I use brown to weak levels. These were just my to identify my some references in the low side, and just taking this low here, because of the action of the traders, or what all trading or the traders were doing the previous days, and there can be something here. Now, because and the reason being is the market just kind of like shoot to the highs here, but it failed. There was a lot of trading back and forth here, and then when it came up to here, when it finally repaired this high, it just died there. But it is not having a downside continuation. So it's just not having it. There's nothing to that. When I start to see okay, this is slowing down. There's nothing here. There's not a reaction. There was not an attempt to take this low out. That's when I closed. I didn't close. I removed my because that was a bracket entry with a tight stop to the downside. Okay. And it has to work fast. That's why I say it has to work fast. I didn't even the market didn't even get close to to where my stop entry was. And when the market just started trading here, building value here, no, okay, this is nothing here. This is too dangerous. What can happen is the market can take these lows out really quick, or some kind of violent, really fast, like boom, go to the downside. It fills my entry and then just bounce back right away. That's common, right? Because we have an upside market. If I am going to go short in some way here, I would like to be short somewhere up here, for example, right? But if the market comes back up inside this range, for example, the target, if there's something here, the destination is the opposite side, but the market has rejected these higher prices. Okay? The market has rejected these higher prices. Forget about everything else. If I just use that information to see a potential trade, okay, to see what can happen or what is happening, using a little bit of imagination here, you start to see these scenarios. What can develop, right? But the market is just doing nothing. Right? How many times have you been short here? How many times have you been long here? Okay. Right now, so far. The most important thing to me is the distribution has been closed and the market is back inside this trading range. We have the 3-day trading range, something that we talk also. No, we didn't talk. I put this on Twitter, I think. We have this 3-day range. The market has looked above, has a breakout of the range, and fell back. Right now, it's falling back inside this range. And the destination trade, when, because this is a look above and fail. So far, it's a look above and fail of this 3-day range. Notice how now I am talking of a higher time frame, a bigger time frame. My observations take me to those ones. It keeps you, but we got to see more. We have to see more. We have to learn to see, or just what most traders do is just look over the hood. But what most traders do is, let me take this chart out. Okay, the market is going high, let's keep buying. The market is going lower, let's keep buying. Let's buy. The market is going higher again, let's buy. Then it's going to go lower, let's sell. There is What is that? This is a very short time frame. To see that, to see these kind of things, what I use is this thing. Remember yesterday what we have here in this period. This period here was red, red, red. The whole I didn't see I don't see that quite often actually. When I see the whole the whole period having been completely red, there was a lot of congestion here, a lot of congestion here. Right? Usually, most of the times, almost all the time, you see some blue there, right? Some light blue, if not, but there was right as hell, or orange as as what? As Florida, or as Donald Trump. Okay, all right. Hey, DX958, DX3 Santan. Man, I'm sorry, I didn't see you. I just noticed that you are there, or you were there. I think you are long gone now. This is something that you know, painting yourself as a, or painting the market as a beer market, as a bull market, is that's an example for having bias. You have a bias. Okay, this is a beer market. This is a bull market. I am bull. The bulls are here. That's just looking. Just overcooked. You're just looking at the surface. You are not paying attention to what the market is doing. You know? Guess what? For example, what's happening with the market? What's happening? We talk about this. What the market is doing? There's 1, 2, 3, 4 days to the upside, and there's a trend line here. Which actually we may say a lot of traders will say, oh, okay, this is a trending market to the upside. But this is actually quite dangerous here. Because what can happen if the market trades below this beautiful line, this beautiful trending line? It's almost perfect, and all the lows can fit there. Guess what do you have below this? Stops all the way down to the 4,500. 4,500 is support, which it was resistance before. But also look at the high. There's no excess here at the high. I'm trying to label a market, just as a bull or as a bear market. This, I think, is just too simple. What we try to do, I was there. Okay, what we try to do is, no, okay, I had to buy and hold. I had to sell and hold. Okay, and we don't understand market dynamics. Okay, but because once we have a position, once we have a trade, based on the information that we have, the next thing is monitor the trade. This is very important. This has to monitor the trade. What can happen? What needs to happen? Okay, and what we will do once we are in the trade has to be, we need to know what we will do before entering the trade. We cannot go into a trade saying, okay, if I'm going to go, I'm just going to hold no matter what happens, because we are not monitoring our trade there. We're just done, and that's very risky. Here. Okay, and most traders, I hope you have attended Jim's webinar. It's very. But it is just it is just, man, you can find the trade, the webinar here. You will just post it here. And the thing is, one of the things that he has said today, for example, is this. You know, most traders don't want, just want to know where or when to buy, when and where to buy. Buy here, buy there, sell here, sell, buy there. And God, it was, if it just was that easy. Okay, trading is not easy. Okay, what happened? What it is? It just doesn't work like that. But most traders want to do that. What most traders, when they start trading, especially new ones, is they just want to hear somebody, you have to buy here and sell here. And the statistics are there, the numbers are there to prove that that is not a good strategy. It doesn't work. Yeah. 80% of the accounts that are open are closed, right? Are just run. They just run out of money in the first, between the first 2 months. By the time 3 months has passed by, a tiny fraction remain. Most of them are gone. And what the remainers will be gone after a year. I am not saying that to discourage anybody here, but that are just the numbers. And what all those people is doing. Just think about that. What all those traders are doing. Okay, the vast majority are just think about that. And now, and you can find a clue, right? You can use YouTube, you can use Reddit, and you will see what most traders are doing. You can use Twitter to see what most traders are doing. And if you do, we do what most traders are doing, how can we expect different outcome that most of them? Most of the accounts are closed in just 3 or 4 weeks. Most of them. A fraction remains to up to 3 months, and the rest are closed within the year. And that is also a rate in business. Business, there are the small business that are open all over the country every day. The amount of business that I start every day is just impressive. And the statistics are kind of like a little bit like that as well. It's a little bit higher though. Okay, a good amount will be closed in the first year. After 2 years, more than 70% of the business will be already closed. That's a statistic. That's just how it works. As I say, I'm not trying to discourage anybody here, but this job is a business. You cannot pretend, or you cannot treat this business, this job, okay? I cannot as a part-time job, okay? If expecting something that is just not realistic. I have seen a lot of traders here that do this as a part-time, okay? That do this as, I have a job, I have a computer, and when I have a break, I go to the market. I have 15 minutes, 5 minutes break, and check, okay, I do this, okay? When that happens, you are not focused on the market, but we are expecting something. We are expecting an outcome that even for experienced traders, even for seasoned traders, it's very hard to achieve. And they are dedicated to the business 24/7. And we, trading just 15 minutes a day, expect to make thousands of dollars in this business. Now, if I want to do that, I need to, I need to control, right? I need to, do something with my expectations as well. I need to have more passions. I need to see more. I need to uh, have some goals, some learning goals there as well. The learning process will take a while. It will take longer if the process of learning to trade, which is, as I say, as any other business, any other job, is about 2 years. Anything you have done, if you are a professional in something, you can relate to this. It takes about 2 to 3 years to be proficient, to start being proficient in something, to master something, to master really good. Doesn't matter what you do. If you're a cook, carpenter, accountant, lawyer, but we need to do it the right way. You don't expect, for example, to go and learn how to play football. Okay, and then I play football. I see these guys making millions playing football. Okay, I go to play football, and in 1 month, I'm going to start making a lot of money. Because that's a high competitive business, football. So is trading. And the thing in trading is that we are here up against the best in the world. All the traders, all the good traders that remain are all traders, very experienced traders that know how these things, how to face the market, how to change, how to adapt. We are up against them all the time. All the time. Those are our competence. Those guys are our competence. And we are never going to figure out the market. Okay, we may figure out sometimes, okay, this is what's happening. And sometimes, because that's what's happening now, for example, right? The pain trade. Okay, that could be something that that is within the odds. But that doesn't last forever. Once it's done, it's done. Another thing will happen. Again, the market has been bought at the opening, this opening mark. What is this mark here? Oh, I put this mark to when the market was being sold from yesterday's value area low. Okay, this also is not a reference. Alright. Two perfect bars, two perfect balanced bars here. Nothing here so far. And this is a balance, this is inside, remember this. Treating this as I am treating this day as a separate day. We have an inside day here. So this day is a reference to when the market goes back to the upside. So far, higher prices have been rejected. Value is building lower, but this is a very narrow range. Narrow ranges can be toppled really easy to the upside or to the downside. Notice now how this market is being bought, right? It has no excess here. It's being bought from Halbach. Questionable low yesterday. Questionable low before yesterday. No excess here. And the spike here in 45.57. And all these observations, this is what we want. We want to try to achieve. These levels, I mean, this kind of market understanding. If I say this is a bull market, okay, I will be looking for the upside. If this is a bear market, I will be looking to the downside. And that's a bias. Bias are, yeah, a really bad thing to have. Biases kill traders, kill accounts. Okay, it is 10:35. I won't have a market update today. What I will do is I will come back at maybe just before 2 p.m. for FOMC. Having Chairman Powell speaking at 3:30 as well. Alright, guys. I hope you have a good day, a good rest of the training day. Stay safe. See you soon.